Welcome back. In this Palantir stock update, we have a lot to cover. I'll go over PLTR's crazy week, give new stock price predictions, analyze whether or not to buy more or start a position at these levels, talk about potential resistance at $30 per share, compare trading volumes since IPO, look for more institutional buying, cover the lockup expiry again, touch on a fair valuation, and share my top 5 reasons for why I'm choosing PLTR over others. Let's get started. PLTR's crazy week. This week had some of the most downward pressure I've ever seen in Palantir. I'll explain why this movement is natural in just a minute, but first, there are 2 components that can explain this negative downtrend that continued throughout the week. Number 1, Citron announced it is short the stock with a target of $20 per share. That got announced last week, so it definitely still played into the momentum, especially on Monday, with people panic selling after the weekend. Watch my video debunking Citron if you're worried about PLTR being hurt in the long term by this short seller. Number 2, selling continued this week when Morgan Stanley shared a note that sent PLTR closing down more than 12% on Wednesday, after they downgraded the stock to underweight from equal weight. The firm said Palantir is trading at a, quote, significant premium compared to its peers, with its stock more than doubling since it went public in September. I'm going to share some key points to Morgan Stanley's note. Quote, with PLTR up 155% since listing with very little change in the fundamental story, the risk-reward paradigm shifts decidedly negative for the shares, end quote. They continued on by saying that, quote, while strong Q3 2020 results highlighting sustained momentum in the government vertical, accelerating growth in the enterprise, and record margins of greater than 25% represented a slight fundamental uptick versus initial expectations. We believe much of incremental move since Q3 2020 results are likely related to factors outside of fundamentals, including strong retail long interest, squeezing strong institutional short interest, Morgan Stanley analysts wrote. Now let me say this once and only once, or maybe I'll have to say it every time there's a downgrade with someone claiming the company is overvalued. Palantir is a very strong business with a $100 billion future ahead of it if all goes right. The stock has run up in the short term mostly because people realized this following Palantir's Q3 report, and only partly because of retail investors jumping on the hype bandwagon. And this goes for everyone. The stock is not going to crater back to IPO prices for no reason. Institutions have been buying up shares, and the bull case is what everyone is eyeing. Weak hands can get shaken out, and we've seen that with some negative press. But you aren't going to lose the entire backbone of this stock, the long-term shareholders. And before you know it, in a year or two, you might be kicking yourself for claiming PLTR is overvalued in the 20s. Seriously, this is what I warned you about when I said, quote, very few analysts have been right about the likes of Tesla and NIO with their financial models, end quote. Will they ever understand growth plays? Leave a comment. Shay, director of options at Simpler Trading, said Morgan Stanley's call was, quote, short-sighted. I'm looking at this as a 5 to 10 year play as far as just buying and holding the stock. It's a leader in the data analysis space as well as AI. And that dialogue is very encouraging. Now for my stock price predictions. And please remember that these are just my thoughts and are by no means financial advice. I don't see PLTR dropping below $20, the Citron target for the end of 2020. I'd give that a very low probability. And if it does drop to 20, the lowest I see it dropping past that would be 18, the next strong point of support. But there should be large volumes of buying even before then, so the stock would rebound quite abruptly at that point. I do think, with this healthy correction, we may be settling down with some consolidation in the 20s before roaring back above 30. Now that I've gotten the short-term worst-case scenarios out of the way, let's think about when Palantir will rebound back above $30. At the latest, I think PLTR will surge higher to near or above all-time highs with their Q4 report that should happen in January of 2021. Buying at these levels. But making these kinds of predictions is difficult, as is any accuracy in the stock market. That's why retail investors are most successful in long-term plays. For instance, a few weeks ago, I kept mentioning how Palantir would be at $20 per share by the end of the year, and that was with the stock in the teens. But I'm glad PLTR is cooling off of all-time highs, because that means there is certainly room to run above where we are in the mid-20s. I think around or slightly above $22 is a good buy at this point. However, if you are going to be holding for years, as I and many other retailers plan to, even $30 and above that should seem like a good price for PLTR's core business and strong revenue forecast. Anticipating resistance. I've been asked a few times if we will see Palantir stock crash down from $30 when it reaches that level again. My answer? It very well could, but it depends on what's going on at that point in the Palantir story. We do have a resistance level at $30 or so, and PLTR will retest that eventually. We'll learn more about if that's a real point of resistance if the stock fails to break through that point whenever that happens. But if I had to speculate, I'd say that there is no specific resistance level for Palantir. It's just more about the basic demand for PLTR shares not being as high since we've seen this recent sell-off. Volume of trading. For anyone wondering, PLTR has an average volume of 65.5 million shares. That compares to 335 million shares on the first day of trading, followed by 124 million. The highest we've seen since then was on November 27th, with 208 million shares traded coming off of that massive spike in share price. Institutional buying. As I said earlier, hype is part of the reason for why the stock has surged recently. The good thing about such a movement is that the company has attracted a lot of attention from those who have enough money to move markets with their words and their dollars. Institutional investors. Like I've said before, the best that retail investors can often do for a stock is make a positive movement in the sentiment of that stock. Regardless of whether or not some stock market gamblers are leaving now that the stock isn't shooting up every single day, I see PLTR's best days ahead of it even in the short term. Heading over to NASDAQ.com, we'll see institutional ownership of 176.5 million shares, or approximately 12%. We know that ARK is increasing its position constantly, if only slightly. Watch this quick clip about the broad interest in Palantir stock. I find it very insightful.
If we can bring in Palantir, which is a favourite amongst your Asia-based clients, Chris, but it had its worst day on Wednesday since going public. I guess that would mark it out as a buying opportunity, though, for your clients.
Well, yeah, if we stick to the buying the dip, mentality that we've seen our customers have for most of 2020, yes, it would. And this is something that's kind of unique to Asia. So we see the Palantir is not really being a net buy from our U.S. customer base, but across Singapore, across our Asian customer base, for the last month plus, we did see this as a net new buying. And it was the largest net new buy from what we saw our customers across Asia as compared to anything that we had in the United States.
Lockup expiry. For those asking about how the lockup expiring early next year will affect the stock, I do foresee downward pressure as a result of the lockup expiration. But I don't think that a potential drop in price should change your long-term thesis or targets on this company. As a long-term investor, I'm not worried, and I'll keep saying that. Insiders might be selling, since the stock has gone up so much, thereby increasing the downward pressure. But hedge funds and institutions could load up on shares given this upcoming opportunity. A fair valuation. I have an in-depth video on PLTR's valuation in the works with a DCF model, but for now, I'll say that I like Palantir as an under $50 billion company, with a compound annual growth rate that looks like it will remain in the double digits for many years to come, and software platforms that seem unique in their literal applications. I've got a lot planned for this December when it comes to remaining the most in-depth channel for Palantir analysis. One thing that I really want to get to is how the actual software platforms work, what they look like, what they do, and what Palantir's core competencies are when it comes to those specific software applications. To close out this video, I'll share my top 5 reasons I would use to convince someone to add PLTR to their portfolio. 5 reasons I love Palantir. Number 1, strong growth. Number 2, an ambitious mission. Number 3, a unifying culture. Number 4, brilliant executives. And number 5, a wide open opportunity. With big data and AI applications set to define this decade, I'd choose the still relatively small Palantir over nearly anyone else for the above reasons. Wow, that was a lot. Where do you think Palantir will be in 10 years? What will the stock price be? Will they be one of the top companies by market cap, or am I a little too crazy? Leave it in the comments. Drop a like if my thoughts and analysis were helpful to you, and subscribe if you haven't already. Until next time, peace.